Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, June 13th, 2018. So we finally have the anxiety of the Fed announcement behind us, and I really believe that we're going to start to see things falling into place with what we expect with the markets. And really, it's all going off of our predictive analytic model, and we have time-wise that we're anticipating that the market's going to be heading down. Sentiment, we've had extreme bullish sentiment readings, so we know that everybody's leaning on the long side. And technicals, we ran into resistance, and we have some bearish divergences, which I'll go over in a little bit. But let's take first a look at the sentiment charts, and here you can see where we have our, these extreme bullish readings here, and the 97% is actually where it marked a top on everything. We've been kind of just jockeying around. But we know that the majority are bullish on this market, and we know that when the majority are usually leaning one way, the market's going to go the other, and this is what the expectations are. And if we look on a longer term part, the longer 10-day average, you can see that it's right at areas where we've had decent pullbacks, and we're not. It's not one of those. We're looking for a crash right now. What we're actually looking for is a nail biter to the downside. It's going to end up being another buying opportunity, and that's going to be really the important part, because I've gone over a number of times where we have the Nasdaq and we have the Russell 2000 that we're making new all-time highs. And the bulls just ran out of time with the S&P and the Dow. So we know the time period to expect a low, and the decline that we're expecting could be fast. And what it's going to do is scare all of the your bullish traders out there to bearish, and from there, it's going to set up a nice buying opportunity. And the predictive analytics model, it will be running into the time period for the low. Sentiment will most likely be at extreme bearish readings, and we'll have technical reasons to look for the reverse to the upside. So let's take a look at our charts here. This is the S&P on a cash basis on the 15-minute chart. Now, if you notice, we've had bearish divergences that were forming all the way from here, and once we made this top and we started to see the bearish divergence on it. This was really the kicker, where we had a major divergence. We were very overbought, and we ran into the resistance. And if you notice, we have three tries to the upside. Once that was done, we had to move to the downside, and then this was the little shakeout right here where I thought I was going to get stopped out, because I put my stop at the 27.90, but it held off, and now we're back, below where the sell trigger was. So what we have to watch for tomorrow is the 27.70. That's just your retail buying spot, because it's a moving average, and it's some support in this area here, so it would make sense. If that doesn't hold, then I'm anticipating the 27.63 and the 27.61 to come into play. Now, on the upside, if they decide that they're going to try to open it up, this is that channel that I've been showing members, and you can see we landed right at the top of it. That's these black lines right here. So I'm going to actually move this away here, so it takes away some of these all these lines, so it's not confusing. Now this is the bearish wedge that's in play, and this is the target that we've been pointing at, and it's going all the way down to the 26.50 level. Now again, it's going to most likely come in right when Woody's expecting that low to come in, and it's going to end up being a great buying opportunity, because again, from a technical front, we ran into resistance, we had bearish divergences, and we know that everybody is bullish on the market. So those are your really the predictive analytics that are going to give you the idea that the markets are going to be heading lower, and for the most part, most likely that's going to be taking place. And when we get down to our target, that may not even be the target. This is just for now, but we have to feel out where the time period is when that happens, because the 2600, this was the last extreme sentiment low, so there's a chance that we could come down here. Now again, the market's going to do what it's going to do, and it may take a few days to play out, but when we have everything lining up the way it is, and our members have known about this for quite some time, it's it's a pretty high odds on trade, and that's really what you're looking for in the markets. Instead of what the normal philosophy now is listen to people on CNBC or read another newsletter or something, and everybody's jumping back and forth, and then when the market reverses, they try to change positions and get to the short side. But typically when that's happening, they're running out of time on the short side, and we're about to make a bounce. And that's why these you get these extreme bullish readings at tops, and you get extreme bearish readings at bottoms. And again, it's why this newsletter is so unique, is that there's nobody that really puts these three pieces together in a newsletter that gives traders an unfair advantage over most people that are out there. So for right now, with this video, I give you a pretty lot of information. 2770, 2772, get a reaction trade down to 2760. Below there, the next line in the sand is coming down to the 2726. This is where I'm suggesting that if you got short from up here, maybe take a little bit of profit. If you're a swing trader, wait for a bounce and reshort it. And most likely when we take this line out here, we get a panic move down to the 2660. So again, we have a lot that's coming on. Volatility is going to stay around here. We know when the low date should be coming. It's when that's happening, and you kind of have some targets, you're anticipating that the move can be pretty fast to the downside. So you probably want to know when that move is. And with that, have a great night, and I'll talk to you guys next week.